Lindsay-Bourne. I'm a venture fellow here at Newchip. And today we're going to be talking about how to accept foreign payments, some of the common trends that happen for companies who are looking to incorporate in the US who are located outside of the US, and also some trends that we're seeing with domestic companies when it comes to raising capital, how to structure those conversations, and how to set up your deal flow. I have three wonderful guests with me here today. I'm going to start with Chandler. She's going to introduce herself, and then Bobby and Jesse are going to introduce themselves as well. They've been generous enough to offer their time. They're coming to us from Silicon Valley Bank. Chandler, take it away.
Thanks, Gena. Hi, everyone. My name is Chandler White. I am a foreign exchange advisor at Silicon Valley Bank, where I've been for the past 3 years, and my role is really focused on working specifically with early stage companies on the foreign exchange side, which typically revolves around sending outgoing payments and receiving incoming payments. So I'm a point of contact at SVB for clients if they need any advice on that, as well as for market insight.
Hi, Bobby Donnelly. I'm a foreign exchange advisor for our global fund banking practice. So I work with all the venture capital private equity firms in the US. SVB have approximately about a 70% market share of venture funds in the US. So any venture fund that's making an investment outside of the US, we would typically help them in terms of getting those funds converted into foreign currency and distributed to the investment company. And also we help them as they think about how currency affects their fund and their fund performance.
Yeah, my name is Jesse Bardo. I am an evangelist here at SVB. I come over to SVB as having been a former client, and so was a co-founder of a venture-backed company here in Boston, and built a company around $25 million investment from Bain Capital Ventures. And now over at SVB, I help founders with everything outside the banking, and typically working with founders from the inception period to Series A, and then passing them off to other folks within the bank who are helping them scale at that accelerated growth period of the business. So excited to be here today. Thanks so much.
Thank you all. And I want to put a little bit of context around why we decided to hold this panel today. One of the things that we're noticing here at Newchip with our cohort members, the businesses that are coming in, we're seeing a lot of individuals that are coming from the southern part of Africa, so Johannesburg, some of the regions in Central America and Mexico. We have some individuals coming from Australia, New Zealand, and also Europe and Canada. And what we're finding is that again and again, they have questions not only about how to incorporate, but how to manage foreign exchange risk, how to accept payments, and then also from the domestic side, how do I accept payments? What does it look like as an early stage company to accept payments from outside of the US? What are some things that I need to think about to lay a foundation with my banking partner that really sets me up for success if I'm thinking about going at a global scale with my business? So the first thing I really want to start with is with Bobby, and maybe you can talk a little bit about some of the challenges you see with founders outside of the US, some of the things that they oftentimes come to you to have questions about, and what are some best practices when there are founders who are from outside the US who are thinking about incorporating here.
Yeah, a couple of great questions, Gena. So I think as a founder that's raising money outside the US, typically where most of the capital availability obviously tends to be in the US. So one of the things that can sometimes, it's a bit more of a small tactical thing that can impact a founder, is you might raise, anywhere from $1 million to $5 million from a US firm, and you will receive it to your local bank and it'll get converted to local currency. So we've seen a lot of instances in the past where your local bank, particularly if you don't have, I suppose a strong relationship with your bank, sometimes they can charge quite high exchange rates on that. So one of the things is some of our founders can be a little bit disappointed is when you get your money in and you realize that maybe 3 or 4% of that has been lost on currency rates. And particularly if they're working with Newchip. Obviously, from our side, as from my perspective, as working with Newchip on the fund side, we can obviously work with Newchip and ensure that if any of your founders want to receive their capital in local currency, we will be able to help them make sure that that kind of charge is kept to a minimum. And that would obviously be the same with other venture firms as well. So that's kind of one of the things, just more on the tactical side, as you're raising money and you want to get into local currency. Feel free to talk to Gena and kind of see, well, what are the best ways that I make sure that I can get all of the money that's needed? Because obviously, as you're going to invest into your company, you want to get every single dollar or rupee or euro that you can out of that. So that's the first thing. I think one of the trends that as a company raising capital outside the US that you probably have to think about is that at some stage in your future, you will very likely end up in the US. And it's one of the biggest markets. Obviously, it's a target market for every fast growing technology company. And one of the things that a lot of companies do go through at some stage, and it kind of might be more in the Series A, Series B stages, it's what's called like an inversion of your corporate structure. So if you're a corporate or a company and you're located outside the US, you will have your head office in Dubai, or you'll have it in Dublin if you're Irish like I am, or you might have it in Auckland, for example. But at some stage in the future growth of your company, you're going to want to invert that, or you're going to want to create a US entity, and that most likely will become your corporate structure. And some of the reasons are for that is that US investors, all the people that have abundance of capital, prefer to deal with US companies and prefer to deal with people located in the US. It gives them a lot more comfort as they go to deploy capital. So not anything that will be in the pre-seed or seeds or even Series A stage, but at some point in your future, as you start to think about your international footprint as a company, and Chandler will be able to kind of give you a lot of talking points about this, that inversion of your corporate structure will be a feature of your kind of future. And it's something that we see a lot, that companies that start outside the US want to come to the US, and then there would be an inversion of that corporate structure. And there's loads of people in SVB that can help you kind of, if you want to talk about that, or who to talk about, or how to figure out how to do that. I don't know exactly how to do a corporate structure, but we know people that can help you with that.
I want to check in on something that you mentioned, which is that the US is really a target market for fast growing companies. What do you think some of the attributes of the US business environment are such a draw? Why do you think it's such a target market for fast growing companies?
Yeah, maybe Jesse might be able to kind of speak about this a little bit better. But I think obviously if you establish an entity here in the US, then you're here. You can obviously travel around. It's all the one language. It's all the one currency. And there's obviously about 340 million people in the US. So I think it's a very easy market. But Jesse, I know from your experience, you might have some thoughts, or did I sum it up okay?
Yeah, I think that's a good transition into the trends that Jesse is seeing as well. And maybe you can expand a bit on the work you're doing with domestic founders and some of the trends you're seeing.
Yeah, no, I mean, I think in general, I think part of it depends on the industry too. I think there's some things happening here, especially as it comes to like corporate venture capital and certainly the liquidity in the market. I mean, there's a lot of money out there right now. So that's an attractive reason to want to get into the U.S. market and certainly work with U.S. VCs. But I also think that there's the general population and the folks that you're trying to sell to, the consumer here is often tolerant of an alpha, of a beta. I think early stage startups, there's a culture of that, of building brands early and trust with those commercial partners. And we're seeing that even scale up to the CIO level. I think more and more companies are getting more familiar and more engaged with large corporate entities that really weren't alpha or beta tolerant beforehand, and now with how quickly software is moving, and I would say the same thing with robotics, clean tech. There's just so many different things that we're seeing. The trends are just going up and up and up in terms of adoption, but also money in the market for them. And and various different VCs really spending a lot of time there. So I don't know that that's, there's different places that have obviously great, very specific things that they're really, really good at. And I think we see that same thing in the core regions of the US as well. There's, Boston's known for its robotics and enterprise SaaS, whereas you go down to New York, it's fintech and e-commerce, LA as well with consumer. I think that's started diversifying through COVID and the remote work. And I know we're seeing the same thing with investments, foreign investments from US VCs. That's starting to, I think, change. And that tide hopefully will lift all boats. But right now, with the tremendous opportunity that we're seeing and where people are currently spending their time, I do think that it's advantageous for foreign companies to come in and start to build a base here.
Thanks for that deeper dive. I want to dig in a little bit deeper and also just talk about core banking components. So if a company is founded in the US, so a domestic founder, and they're an early stage company, when you think about creating a checklist to prepare for fundraising and building your investment deal flow, I know that's a bit more practical than some founders tend to consider that conversation. Oftentimes founders see it as a big chunk of work that is a little bit more challenging to break into manageable pieces. So when you think about from the perspective of your banking partner, what are some kind of core checklist components to prep you for that fundraising, to prep you for that investment deal flow, especially for early stage companies who maybe haven't had experience raising capital before? And this is just for domestics.
Yeah. And I think the really big piece to that question, and it's a great question, and I would extend it across not just banking, but your core partners that you're using to, if you're paying or they're dealing with your business in some way, you should be asking for outsized impacts. It shouldn't just be a bank account. It should be that you're asking them for introductions, for getting them engaged, getting you engaged in their circles, because these are long tail relationships. There is not a one size fits all, although we'd like to think there is. Every deal is different and every VC is different. There's a lot of moving parts to the and different pieces to this puzzle. So you want to lean into those partners who know a little bit about what you're doing and are versed in the ecosystem that you're spending the time to build this in. And if you don't have that, you will find a partner that does. I think that's where one of the things that we do, but I would say the same thing for law firms. I would say the same thing for the other partners that you think your company is using as maybe service providers. What can they do for me? And asking them those questions, because at the end of the day, it's a really difficult process. No matter who you are and how you're doing it, fundraising it takes you away from the core of the business that you're trying to run. Makes you go out and pitch your business, which again is a good skill to have, and it's a really important thing to do for the business. But it's only one piece of what you're actually trying to accomplish, and that's with customers, with talent, with running the core of, again, whatever business it is. So I would say make sure you have partners that are willing to support you across the various things that you're trying to do, and that's as I already outlined. But then also, how can we lean into this a process that is going to be very singular and very unique for that individual company, and help provide the lift in ways that we can help.
Thanks so much. One thing that I want to come back to in the conversation has to do with something about different regions and how they have different levels of expertise in the US. I think that's an interesting point to bring out. But before we do that, I want to hop over to Chandler. And I just want to get some, a little bit more detail from you about the work that you're doing when it comes to foreign exchange. And also, we've talked in the past about common misconceptions that can happen when it comes to doing business in foreign currency. I'm wondering if you can talk about that, and what type of customers and transactions are you noticing that early stage companies are coming to you with questions about, things they need to consider?
Yeah, that's a really good question, because a lot of the misconceptions do come up in the early stage, which is completely normal because foreign exchange tends to be a very niche part of finance where you're founding a company, you're not exactly versed in the ins and outs of currency conversions, which is where I come in at SVB. So one of the most common misconceptions that I've seen is that if you're a US company, you have to do business in US dollars. Or if you have the option to pay a vendor in US dollars or get paid from a customer in US dollars, that's the best option. And I think this really stems around the idea that if business is done in US dollars abroad, that there is no FX risk for the company. But really the FX risk is still there, it's just more hidden. And a conversion is happening, it just becomes less in your control when you send US dollars. Similarly, other misconception is that in order to do business abroad, you need to have global subsidiaries, or if I have a customer in Australia, then I need to open up an account in Australia to collect that revenue, which is also not true. So really in sum, I would say the most common misconception is that FX is a difficult thing to do or an uncommon thing for early stage companies to engage in. But really, most of the early stage companies I work with at SVB have an international presence. It doesn't have to be a huge presence. It could just be a contractor in another country, handful of customers in Europe, a foreign invoice. Some early stage companies, I would say at the later stage of the early stage spectrum, might have an international subsidiary, but that's usually as complex as it gets, at least in the pre-Series A stage.
I'm so glad that you brought up the concept that some pre-seed and seed, and even some Series A, are at this phase where they think that if they want to work with a company that's outside of the US, either as a partner or as a client, that the expectation is that they need to have a bank presence in that country. And based on what you've shared with me, that's not necessarily the case. Can you talk a little bit about that?
Yeah, absolutely. So like I mentioned earlier, most of the foreign exchange needs in the early stage space are either paying someone abroad or receiving currency for someone abroad. For the outgoing portion, this could be as simple as paying a invoice in local currency instead of US dollars. And with SVB, we have a full FX portal built directly into your banking platform. So you would be able to purchase currency at any time during the week when the FX market is open, be able to receive a live rate, purchase the exact amount of currency that you need, and then wire it out. So it really is easy in terms of just doing business as usual. No extra, the only extra step would be to just purchase the currency, which only takes about a minute. And then there are loads of benefits to paying in local currency rather than US dollars.
And it sounds like this is something that both you and Bobby have a lot of experience working with because of your division and your levels of expertise. I guess I'm curious, what sort of presence, what sort of international presence do you notice that Series A companies have?
What I've seen specifically, kind of like what I mentioned earlier, it's really common to have a development team in another country for a variety of reasons. Just specifically around the cost of labor tends to be a little bit cheaper. Same thing, if you're wanting to expand your customer base, makes a lot of sense to go outside the borders of the US, a whole range of untapped markets. And specifically for that international customer piece, we make it really easy to accept incoming foreign revenue, which is one of, kind of going back to one of the common misconceptions with what we have called Nostra accounts. So these are essentially accounts with SVB that we have around the world that are denominated in other currencies. So back to that example of a customer in Australia, what the company could do is use a special set of payment instructions, and essentially that payment from the Australian customer gets routed through SVB's account in Australia. We do the conversion to US dollars, and then we credit your US dollar account. So the ability to have a range of customers all over the world without needing to set up bank accounts or do anything more than just provide a set of payment instructions, and then it gets converted back to US dollars.
Oh my God, that is music to my ears. And I can see Jesse and Bobby's wheels turning a little bit. Bobby, I'm wondering if you have some other thoughts to share on that.
Yeah, I think one of the things that we probably see, well, this is might more be for US focused companies that are particularly English language based companies, that the one country that we see those technology companies going to next tends to be the UK. English speaking language, quite 60 million people living there. And that's sometimes when we see a US company that wants to start maybe selling their product internationally, maybe wants to put a couple of people on the ground internationally. The UK is sometimes the first step to go international. And SVB, we have a fully operational branch in the UK. We have people like Jesse, myself, and Chandler all located in the UK that will be there on the ground to help people, whether they want to put a couple of contractors there, whether they need help forming a UK entity. But that's where, if you're starting to kind of get a bit of uptick here in the US and your product is starting to sell well and you want to go international, we would see our clients, the first kind of where they dip the toe is like, hey, let's put 2 contractors in the UK. Let's try selling our product in the UK and see how it takes off. And obviously from there, a lot of our clients go from 2 contractors to putting an office there to hiring full-time people. Then we have clients that have offices with 400, 500 people in the UK, and it becomes a huge part of their business. So kind of going back to one of the questions you were asking there, is the first kind of step outside internationally can often be the UK, and that's where SCB does. We kind of go where our clients are. So we've seen that a lot, and we put the UK. I don't know when we did it. I think it was probably back in the 90s. We put our UK office there because we saw more and more of our clients go to the UK.
Got it.
Yeah, and I was just going to add, the only thing I was going to add is I talk about the FX team on every call I have with a founder, because it is so prevalent early on. We're seeing so much foreign development that it's one of those things. We are early on in the relationship, even at the inception. They're starting the business out. They've got a business plan. They go out and they're trying to find somebody who can help build it if they have nobody who can code. And so we're automatically getting that FX team involved then. And I think that's one of the big differentiators for us. And at least my team feels that the real change for us when we can talk about the foreign exchange team and what they can bring to the table.
And you mentioned earlier about the different regions in the US being focused on maybe more specific niche areas. You talked about Boston. So when you're thinking about the regional geographies and what the founders in those areas are more interested in, maybe you can talk a little bit about some of the regional differences you're seeing in the US. And then as a follow-up to that, which of those regions are you noticing are going outside of the US to start maybe building their team?
Yeah, it's a really good question. I mean, there's traditional markets in these hubs. I think, if you ask my colleagues in New York or LA or San Francisco, they would say, oh, well, we're seeing everything here, and to extent you are, but based on where we are in Boston with the universities here, robotics, health tech, clean tech have always been really big. So we call it frontier tech. So that's been a core piece of our ecosystem. And then enterprise SaaS, we've got some, a really trickle down effect from some of the big businesses, the pillar companies that have been here before, and then the talent that sort of has then gone off to do other things. But I don't think we want to be pigeonholed into anything specific, but you definitely, the fintech capital of the world happening in New York, and then added on consumer fashion tech, a lot of femtech. There's just a lot going on. Obviously, New York is probably the fastest growing ecosystem that we're seeing at SVB. And then you go over to, and I'm not gonna, we could talk about LA, or we could talk about Austin and Miami and everywhere else too. Not as well versed in what's happening there, but certainly LA with the core industries that make up that city anyway, with Hollywood, with a lot of the consumer stuff that they're doing, skincare, and then San Francisco has it all. And so as it pertains to those different geographies, part of it's made up by the investors who are there, who have had great experience in those industries that then reinvest their capital. And I think that there's a number of different things that make up why these ecosystems are the way they are. I'd also say, for us in Boston, we feel a very strong and direct link to the UK. We have a lot of things. I would say the UK and Israel are two places where we see a ton of founders. The time zones aren't terribly different. It's an easy jump on a plane back and forth. And so I think those make up real reasons why there is such a link. And we're, I think New York, but Boston also can be a pass-through city. You fly into Boston, you see somebody, you go to one of the universities, then you go down to New York, and so on. So there's any which way that people are connecting through these places.
Thanks so much. And I want to just take a pause and think about the companies that you've seen recently, maybe for all three of you, if you can share some of the things that you've seen working with your clients that have been really inspiring to you. In particular, Chandler, I think because of how specific the work you do is, especially around Nostra accounts and MCAs, can you do a little bit of a deeper dive into what those actually are and how those impact early stage founders?
Yeah, absolutely. So we like to think of these services for collecting incoming revenue for our clients as really a service for our clients to help them expand internationally way earlier than what could have been done, let's say 10, 20 years ago. The tables have really turned in terms of international expansion, and we're seeing clients go global earlier and earlier. And so the Nostra accounts, like I mentioned earlier, are really a way for clients to collect incoming revenue from customers all over the world really easily. But you mentioned another product, MCAs, which is a multi-currency account, which really just means an account denominated in a different currency with SVB in the name of the client. And these are particularly useful as a client expands globally, maybe beyond the pre-seed stage and into Series A, Series B. Usually by this stage, a client will have both incoming and outgoing payments in one currency. So what a multi-currency account can do is collect that incoming revenue, and then the client can turn around and use that collected revenue to pay outgoing expenses. And this is really the first step towards like an actual like strategic FX program. As a client expands, things can get a little more complicated, but it doesn't have to be difficult.
Can you tell me about how you can set up a good strategy or a strong strategy so it's not as complicated as if maybe it's an afterthought and then a couple of years down the road, or a year down the road for a lot of our companies, because they are on the venture path, their expectations of growth are very high, and so everything moves at lightning speed, which you're all familiar with. So can you talk a little bit about that?
Yeah, so I think the key to that really starts with thinking about FX early on. Because just because your payments aren't large and your exposure isn't necessarily huge, it's a great time to start familiarizing yourself with what exactly FX means and how it can impact your company. It's kind of like having training wheels on your bike before you start flying down a hill, which it feels like it can be like for clients sometimes because they are growing so quickly. So it really starts with, I would say, sending local currency instead of US dollars. It sounds pretty simple, but this is really the crux of what FX is, especially in the early stages. And then once you get comfortable with that, it becomes a lot easier as you're expanding. Okay, now it makes sense to have a multi-currency account, and I've already been sending pounds and receiving pounds for some time. I'm familiar with how this is impacting my company. The next step is happening naturally and logically rather than a million steps all coming in together. Like, now I'm in 10 different countries. I don't know what I'm doing. There's so many currencies. How do I manage it? One other point I want to add, that at SVB, every client has a dedicated FX advisor. So it doesn't have to be this daunting thing that happens within the company. We always like to say that we are an extension of a client's finance team, and we really want them to lean on us and our expertise to help them as they continue to expand globally, whether that be through helping them determine if they need a multi-currency account, helping them look at an invoice that's priced in dollars in another currency to determine which is more favorable for the client to pay. Stuff like that. We love when clients come to us, and we like to make it as easy as possible for them.
Thanks so much. And
yeah,
Bobby, great. I was just about to
I was just gonna jump in there as well. I think when Jesse talked about all the different geographies, so SVB tries to be where all our clients are. So I'm based just kind of south of San Francisco in the Palo Alto area. But myself and Chandler have foreign exchange advisors, as we're called, and we're located, I think there's about 20 to 30 of us located all across the US. So we have foreign exchange advisors based in Boston, San Francisco, Santa Monica, Austin, all the places where we see the technology companies typically are. We have foreign exchange advisors there. But we also, so Chandler might be a little bit humble here, but so Chandler might deal with pre-seed, but she's also working with companies that have gone from, $400,000 of revenue per year all the way up to $60 million of revenue per year. And she's been with that company, and she's seen how they've changed and see how the makeup of the company's changed. And one of the things that we do as foreign exchange advisors is we typically ask the client to explain to us how they're structured. And it's from the different structures that we see some of the kind of currency and international development challenges that they might have. So with that, we have a team of 20, 30 people that have seen every different type of structure. We've seen a lot of clients in like almost 18-month period going from 0 revenue to 60 million revenue. So we've seen a lot. We deal with a lot. We see a lot of different things. So Jesse made the point about leveraging your partners, and that's why I think we deal with technology companies. We deal with technology companies that are raising life science and technology companies that are raising money from venture capitalists, and we work with them and we see them as they go through the growth stage. So we kind of feel like we're really good partners that people can come to us and say, hey, this is where we're at. What do you think? So that would be one of the things, kind of to Jesse's point and to Chandler's point, like really kind of leverage your SVB partner and our FX team. We've seen a lot, and we've seen a lot of different things happen internationally. So, please reach out if we can help.
I want to do a little bit of framing too around pivots, and I guess I want to talk about that because when we're talking about early stage companies, as you all know, oftentimes the early idea changes so much between year 0 and year 3. And a lot of times what I see with early stage companies is as they start to have a better understanding of their market and their market rollout, their obtainable market starts to change. So maybe originally they're thinking about just, their domestic region and maybe like an adjacent country. And then as they start to realize what they can do in other markets, they start to adjust, they start to pivot their product. Maybe they start to bring on a marketing team that's more reflective of the region that they're going to reach out to. One of the things that I think is so impactful about the work the 3 of you are doing is it's again laying this groundwork of let's get your structure in place so that 6 months in, if you want to pivot and you want to enter a new market, you have all the logistical components put into place. And that's one thing that oftentimes founders have so much on their plates. It's difficult for them to manage all of that. And one of the reasons why I wanted to bring the 3 of you in is to really emphasize for people that it's accessible and it's manageable when you have a team that's there to help you succeed. And that's just my own, I wanted to share that with you. And I'm wondering if maybe we can talk a little bit about some pivots that you've observed, whether that's, Jesse or Bobby, just about how the groundwork can really facilitate pivots in those early stages. And feel free to open up to that, whoever wants to address that, go for it.
I mean, I'll start because that's my day-to-day life is dealing with pivots. Certainly where my experience running a startup, but also the majority of the early stage founders that we work with, it's you can watch it in front of your eyes as you see them get that product out to market, and then you start to watch the data, and the data shows you, wow, I thought I knew who was going to buy this, and now I know other people are buying it, and now I've got to make sure that those other people can buy it, and what does that mean logistically? What does that mean team-wise? And and how do we dive into that? We talk a lot about Beachhead Market for my companies, and the way we use that is like the first folks that are going to use this, the first people who are going to purchase it, whether that's enterprise SaaS or it's e-commerce or whoever it might be. And inevitably you go in with a thesis, but then you actually get the rubber hits the road, and all of a sudden now you've got customers and they're coming from all different walks of life. And we've seen some crazy ones. And then we also see plenty where it's like, you know what, this is actually working. We're seeing tangential markets that we could get into faster than we thought we could. And it does take a partner. It takes a partner, it takes angel investors, it takes friends and family, it takes VCs, everybody to be flexible. But you kind of know what you're getting into too. I think that's also part of the US market that we talked about earlier, which is there's a tolerance to that shift in those changes, that a business plan is only, it's only as good as when the ink dried on it. And, as soon as that's done, we're often doing something new. So that's certainly the world. That's why I love this job, honestly, is that we're in the midst of that all the time. And for the most part, we saw it 10x in COVID. I mean, all the resilience that we've seen through this experience these founders are incredible, and they're continuing to find ways to make their businesses work, even as headwinds, are pushing down on them, or tailwinds. We've got plenty of companies that have done amazingly through this whole experience as well.
I'm so glad that you brought up what people have been going through for the past year. Sometimes the responsibilities of running and starting a business in a pandemic overwhelm the opportunity to think through some of these very impactful, relevant things we're discussing today. And before I transition over to Chandler again, I just want to check in and see, when you think about being able to respond to these very large scale challenges that we're facing due to a pandemic. And this is really for Jesse, when you're thinking about your deal flow, when you're raising capital, can you talk a little bit about some things to put in place? And if you want to talk about the impact of COVID, that's fine. If you don't, that's fine too. But just more about, given the climate that we're in, what are some things to consider with deal flow for early stage companies?
I think most importantly is surrounding, we talked a little bit about this, but you want to surround yourself with partners and VCs, people that are going to be there for the great times, when the numbers all look awesome, and then the times that it doesn't look awesome, and actually you're really struggling, and you have people that you can rely on to believe in you and your vision and the team you're building. Just as exciting and amazing as many of the stories that we can tell from COVID are, there's equally as many horror stories. And it's not, you're never in an easy position. I'd say, like, through the beginning part of the pandemic, most of what I did was just therapy, because I was the only person that these founders could talk to that wasn't part of the team, wasn't going to have investment. They couldn't talk to anybody. They couldn't talk to their spouse about, hey, I'm really struggling here, and you're just a Zoom box I can talk to. So I think we try to create as many outlets for that as possible, and allow these folks to be able to find that time and space for themselves. And it isn't just, you're not just your business. It's actually part of who you are a lot for these early stage founders. And when it's crumbling all around you, that has implications on your self care and everything else. So I think, going back to your question, it's finding people who are willing to lean in to you and what your business is through all this stuff, because we can't predict it. And again, it's great when everything is up and to the right, but if it's not, who do you feel comfortable like being in the trenches with is a huge piece of this.
Yeah, not everything can always be up and to the right. And one thing that I want to talk to Chandler about is just, what are some things that maybe we haven't talked about yet that you see coming up that are really important to this conversation when you're thinking about founders who are going to come to SVB and do some work with you? Are there things that maybe we haven't touched on that yet that are really impactful that you want to share?
Yeah, from a foreign exchange perspective, I feel like from an early stage perspective, we have covered a lot, specifically around incoming payments from customers. But also one thing I want to bring up again is the outgoing payments to vendors. What I deal with, I would say almost all of the time, is clients sending US dollars to either people or companies abroad. And we see them being charged unfavorably. And this is very common in this space. So we always like to educate our clients on the benefits of sending local currency over dollars. And this is really because we have seen onshore banks sometimes charge 3 to 6 times more than what SVB would have charged. And it's almost criminal because this all happens behind a client's back. It's essentially like purchasing something without knowing the price. And once the money leaves your account, it's really at the hands of whatever bank you're sending it to essentially convert it to at whatever rate that they want. So at SVB, we really emphasize the strength of the relationship. We want to do what's best for your company because we are invested in your company. We want the company to do well as your banking partner. And just being able to see the transparency into the rate and have more control over that transaction may not seem like a huge deal at the early stage when you're sending one payment, but like we mentioned before, like as companies are growing faster and faster, this becomes increasingly important.
Yeah, having all the pieces in place. Well, we're pretty close to time right now, but I want to do some closing thoughts. I just want to invite the three of you to maybe speak to why you've decided to work with SVB, and if there are some things that you really want to get out there that we haven't talked about yet. And maybe Bobby, if I'd like to invite you to maybe start with that.
Yeah, I think when we were talking about COVID and things over the last year, obviously a lot of things have gone remote. So I think particularly as people raise capital, one of the things to keep in mind is just fraud. We're seeing continual fraud cases and kind of fraud attempts across our client base. So that's something that I would kind of really pay attention to. And again, within SVB, you'll always kind of have you'll have a point contact, like a relationship person. It's kind of like the quarterback person, which would be somebody like Jesse. But we also have like myself or Chandler, who would be FX experts. We also have cash management experts, kind of like global treasury specialists. And one of the things they will do is they will help you kind of look at your overall cash management practice and also your fraud controls and ensure that you have the best possible controls in place. So that's one thing is I would say to people as you start to build a company, just be very hyper focused on fraud. And one last pitch for SVB in terms of how we're structured. So Chandler, myself and Jesse, and a lot of our kind of banking teams across SVB. So not only are we split up by geography, but we're also split up by segment. So we would have lenders, we have, cash management specialists, we have foreign exchange specialists that are focused on consumer internet. We have specialists focused on life science. We have specialists focused on enterprise software. And that's obviously because when you think about, let's say, a revenue model like somebody like Fortnite, who are selling games, online, and they've got their revenue model is completely different to someone like, let's say, a Workday or even a Coca-Cola. Like their revenue models are all very different. So we do also have segment expertise as well that like are focused on consumer internet, enterprise software, frontier tech, as Jesse talked, and also life science. Again, Moderna's revenue model over the last 12 months would have been a lot different than most companies. So that's the thing as well within. Yes. So within SVB, we have segment expertise as well. So that's kind of one of the things that you will find is, hey, if you're in the consumer internet space, we have people that can understand your space. Same with enterprise software and the different areas. So again, another pitch for leveraging your partners and picking the right partners.
I was excited to work with SVB because it's the place that was like, yeah, we want you to be a founder and help founders. I never thought, very honestly, I never thought I would work at a bank. And when I was talking to SVB to start, they said, would you be interested in working here? I said, no, I wouldn't be interested in working there. And it was because, it didn't seem like I could add any value to the bank. And so I give it all the credit to SVB to have people like me who are former VCs, founders, partners, folks who have been on the other side of the journey and bringing us in to bring our expertise and our experiences to other founders and really scale that. So I'm a proponent for going and getting somebody who, again, when you think of early stage banking, it's commoditized. Like it's virtually free banking. It could just be that if we wanted it to be. But I think that the bank has recognized there's so much more that goes into it, or that we could provide. And we can bring an ecosystem and an expertise, as Bobby was already talking about, to these founders and help them accelerate. Now that does a lot for us if they do accelerate. And that's where this all comes from. But it's, first of all, let's make sure that these are healthy innovation economies. Let's add to that flywheel and continue to help it move. And we benefit from being at the center of it, watching, as we bank the VCs, as we bank the founders, as we bank the folks all around us, we can set about doing really, really cool things. And so that's what I'm most excited about. And I'm very excited post-COVID for what this is all going to mean for us, because I think we're thinking about this in an innovative way about how to continue to build up these networks.
Thanks so much for that, Jesse. And Chandler, takeaways. If there's one thing about the work that you do, no, more than that, 3 things about the work that you do, you really want to make sure these seed, pre-seed, and Series A founders understand. What would those be?
Probably how rewarding it is to work at SVB. Like Jesse, I never really saw myself working in banking. I wanted to do something that I felt like was helping people. And then I have found that working at SVB, I feel like I play a role in helping my clients succeed, which is awesome. There's been times where I've been able to help a client save thousands of dollars per year on their FX transactions, or help them put in a strategy that they come back and say, wow, this is so much easier, or this is so much more efficient than what we were doing before. Thanks for shedding light on this. And I really love just helping demystify the mysterious world of foreign exchange. And it has become something that I'm quite passionate about. And SVB as a whole is just a great place to work.
Agreed on demystifying finances, especially when it comes to, these new companies that are like, I want to expand, I want to do all of these things, I want to go to all of these markets. And it's great to know that there are individuals like yourselves out there that are able to support them along that path. And so, in closing, I really want to say thanks for you all taking your time to talk with me today. I'm really excited for our founders to watch this information, and we're gonna wrap up. But again, thank you. And if there's any last words, feel free to pop in, and then we'll wrap up.
Thank you. This is great.
Thank you,
Thanks,
Gena.
Gena.